Hey folks, and welcome to the Pipnotic Symposium for the 12th of November 2020. Today we're going to talk about liquidity distribution and the process and how long it takes as requested by Philip. And thanks Philip for making this request, and if any of you guys have other requests, that would be amazing, because I'm just sitting here busy programming all day, and sometimes it's really nice with a break, and these requests are very, very welcome. So thanks again, Philip. So we're going to talk about how the distribution of liquidity at areas of supply and demand is a slow process. I think a lot of people have a difficult time, including myself, being in a situation of uncertainty for an extended period of time. Okay, so let's assume that we have a trade. The trade fills, we're on the 15-minute chart. Normally price will have a bounce and kind of move either towards the stop or towards the target within max a couple of hours, okay, generally, providing this is not before an economic data release. And this is because these micro areas of supply and demand, so these little pools of liquidity in the form of pending orders, are distributed throughout the market, and these are a little bit smaller, okay. And so if price dips down into a window of fair price for an asset, people are going to be eager to engage in the market at that price window, okay? But when you look on the bigger time frames, like the daily, the weekly, and the monthly, which is where I spend most of my time, the process is very slow. And so I can have an area of demand or supply, and price can dip into it, and then the distribution of liquidity from one side of the market to the other can go on for days and potentially weeks, depending how much liquidity is available at this area. And I'm actually going to show an example on the euro Singapore dollar, and this is a pair I'm interested in. We were talking about this up here when price was kind of just wriggling up here, and the histogram was telling us to short up here, and the price got up there, okay, and it was there for 1 week, 2 weeks, 3 weeks, a month, 5 weeks, 6, 7 weeks, and on the beginning of the 8th week, price finally started to break down, and now we're seeing price slowly start to move lower. And this is very normal, okay? And so, I mean, when you have an area of supply and demand and price dips into it, like let's say a daily area, price is not going to dip into it and then shoot off in the other direction for 1,000 pips. I mean, the distribution of liquidity at these key areas is a really slow process. And so, I mean, looking at this one here, we would have to have been very, very patient, sit on this, pay swaps for a pretty long period of time, 2 months. I mean, that's longer than most people are willing to hold on to a trade. But if you trade with conviction, knowing that you're trading at extreme levels, you can see we have area of supply. We have this body is in the range of this one. This is the departure candle. The slingshot was pulled back to here. Price poked up into that area. The histogram was reaching a very high level at that point. Then there's a very high likelihood that price is going to wriggle lower. Okay, so this is a very slow process, as I mentioned. I'm just going to show an example of a trade that was taken on the 1 hour chart. Okay, so price poked down into this area of daily demand. So it doesn't matter if there's demand there, the reversion algo is not looking for demand, but it often takes trades at demand and supply. Okay, so price poked into this area. We had a price inefficiency, so a nice liquidity void above price, and this simply means that when you have something like this, a liquidity void or a price imbalance, that means that there's typically very little buying and selling in the middle of this candle here. The buying and the selling, or the distribution of liquidity, is occurring here at this little area of low probability demand, or at this area of supply just up here. Price was moving sideways, we left, we had a continuation pattern, we gnawed away first of all at this area here. This is a candle, the departure candle. We went up there, we went to the top of it, then we left. The sell zone moves higher. Price went through that and came back down. You can see we formed this child here, which tested this little area of child demand. We moved up to the child, then we started to break down. We moved finally down to this area here, and this is where price left from. And where did it go? Well, it went to here. Okay, so we had a distribution candle, another one that looks like it. We have these two and these two, so this is like an older sibling. This is a child that's testing it. The departure candle is this one here. So this is where we can expect price to go, and price actually went to, assuming that this stuff to the left isn't there, we have a parent, we have a child. This candle left, so we'll move it up to the top of that candle, and this is pretty much where price went to. So it actually went to the parent and through the child, which is typically what we'll see. This is where price had a real turnaround, okay? And so price dumped down, and now we're sitting on this area here. And so, I mean, price got on here. The trade is done. I closed it out manually. So this is the beginning of the buy zone. It's a little bit higher. There's an area of hourly demand here, which held beautifully. Price poked into it, and now it wriggled higher. And we got into the trade just here, or the algo did, and it got in a little bit late, I think, because maybe my computer was off or something, but it got into it a little bit late. Otherwise, it would have got in probably on this side a little bit early, maybe on this side here, on this push lower. But price went down. We found some demand. We started to wriggle higher, and I pulled it off somewhere up in here. I can't see where that little mark is. Here, somewhere just here at the top. Okay, so price came down. Now we started to break down, and so you can see that, assuming that I was still in this trade, because the target is essentially up here, are we going to get there? We have absolutely no idea. But we know one thing for sure, and that is if there is significant demand at this area in the form of pending limits to buy, well, then price is going to have to move away. This shows us that we do have demand there. Here we have an attempt to find that demand by advertising cheaper prices, trying to attract buyers. Have another push lower. We start to move sideways. We have another push lower, and now price is starting to kind of show some strength to the upside. Okay, so this is essentially the market flirting with us. Okay, so it's saying we have this lovely commodity. Doesn't matter what it is. Okay, and we want to make this very attractive. So now the market's putting on a dress and maybe put some lipstick on, nice perfume, and ask, oh, it's very attractive. I really want to engage in this market. But price is like digging down and down and down and down. It's flirting with us via lower prices. Okay, and so it's looking pretty attractive. It's very low. We know that we are at the beginning of a buy zone that we saw via this line here. We've moved beyond that now, so now the buy zone is lower. Okay, and so the lower price gets, the more attractive it gets. Okay, we are still within the range of this plate of pancakes. Okay, so our area of demand. And so should price move below here, I mean, that's a very attractive price for this asset. Again, it doesn't matter what the asset is. This is the same for whatever it is that we're looking at. And so we can expect that the lower it goes, the more people are going to start to want to buy. And this is simply because we're using the whole concept of buy low and sell high. This is low, and if you look at the daily chart, I mean, we had kind of a range here. Let's just draw these off. So we had something like that, the one that we saw, and then below price we had price test this area here. Let me remove all of these. Okay, and then we'll actually find out what it is that price reacting at. It's reacting to this. Okay, so I tested it. It went through it. Okay, we formed this child, so this is lower now. So before the buy zone was actually below this, so this area was removed, and so now we have this one here, which is lower. And then this was formed, it was respected. How do we know that? Because price tested it and left. So this is telling us that we have an interest to buy at this level. Price went to the other side of the market, to the supply, then it shot down really quickly. Okay, and so we've actually seen gold and silver take significant hits these past weeks, and so prices of the gold is dumping. All of my gold mining stocks are down. Gold is down, and so this is just one of those things where you have to keep faith in gold, because gold is historically a commodity that people have often moved liquidity into in the situation of uncertainty. If there's one thing we're experiencing now, it's uncertainty. Okay, and so I mean, this is certainly something that is attractive, and the lower gold gets, the more attractive it is. We have a beautiful area just down here. We have another one here, which is tested. Okay, the buy zone for this area is here. The buy zone for this one here is the low of this continuation pattern. So these are very beautiful. There's nothing in here. There's nothing to do here. So if this doesn't hold, then you don't want to buy until we get much lower. But what I'm trying to say, which I actually haven't talked about at all, is you have to be willing to sit on your hands and wait. Okay, so your trade gets filled and you have to wait. Maybe this is going to move south and stop us out, and that might happen. Rarely do you see price move like this and then go back up. And we had 1, 2, 3, we had 4 hours of selling, consecutive selling, boom, 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 boom. Okay, and then price took a bit of a breather. Then what's going to happen? We don't know. And this could also be a distribution. Okay, price went up. We formed this range here. Price poked up higher to attract sellers. Kind of moved back into the range, and now we're slowly starting to wriggle lower from here. This might go lower as well. Judging by the quality of this level, I would say there's a good chance that it's going to go lower, which is why I got out of this, because on the daily chart, if you see it so much selling like this happening, then I'd be a little bit nervous about buying in the face of that. Okay, so I mean, look at that, boom, and it just looks like distribution, and then maybe we'll have another push lower, okay, through this area here, which will make this a beautiful area to sell at. Okay, and so what I'm trying to say is that once price moves into an area of, let's say, 4-hour or daily supply or demand, or it's buying and selling at buy and sell zones via the algo, I mean, you have to hang tight. I mean, the other day the algo sold the euro US dollar. I think it was an hourly. It sold this up here. Okay, I think it was over here, and look at the time, it just was messing around, waiting. We dumped down, we moved higher, we're starting to paint these white candles, which means that we're distributing liquidity. And this, for those of you who aren't aware of what that means, I'll just explain that super quickly. So you have an area, you have a pool of liquidity. As a matter of fact, let's do it over here. So you have a pool of liquidity like so. Okay, so you have limit orders at these areas here. We refer to these as pancakes. So it's moving like that. Okay, and what price will typically do is, I mean, it'll typically move up to the first one, consume it, and that will typically move the market in the other direction for a little while. It'll move down. But if there's still a balance in supply and demand, well, then the market has to do something differently in order to attract more selling. So it'll move higher, it'll move to the next one. This one is now gone. This one is gone. It'll move to the next one, and depending on how much liquidity is available there to sell, price will either move down from there, or it'll move down a little bit and then have another go at moving higher to the next one, which removes this. Okay, and then it'll keep going until we manage to find these really attractive prices where people are willing to jump in. Okay, so this one is gone. This one is gone, this one is gone, this one is gone, and price poked through the top of this area, and this is where we saw the attractive selling opportunity, which is what people engaged in. Okay, and now we are actually seeing price break down. So I mean, I had to sit on my hands and wait for a long time, for many hours, maybe a day, before price finally broke down. And once price moves away like this and starts to move sideways, well, this is pretty much what we're seeing on the other chart there, where we had the daily sell, and then we have price sticking to that daily demand, and I think we're probably going to see something like this where price cuts through it. We come back, we test it, and then we continue lower, which is exactly what we're seeing here. We have another area of value. Price left the value, we're turning to value, we're leaving. So we have another area of value here. We also have like a small area of supply just here. It was tested, now price is looking to wriggle higher. So this just means that, I mean, price will always move in the direction of the thinnest liquidity. And I spoke about this many times in the past, where you have, okay, so this is liquidity. I'm just going to draw like this. This is the spot price. We have thin liquidity, we have thick liquidity to the upside, thick liquidity to the downside. Okay, so price can easily move around here. There's very little liquidity just around where price currently is. But if price has to move, if price is able to move all the way up here, I mean, there's a lot more selling here. You can see that the increase in selling is greater here than it was down here. And the same applies for the opposite side of the market for buying. So if price comes up here, there's going to be more sellers. If price comes up here, we're going to have more sellers. If price comes up here, we're going to have even more sellers. And the same applies for below price. Okay? And so, but typically price will go up there and it's not going to leave quickly. It's going to go up there and it's going to wait. It's going to distribute the liquidity here. Okay? And so the sell side of the market will be buying and will be selling. They buy to draw price lower and they sell to bring price higher. And so price goes up here, and this is where we are going to start to see these pushes away, like the candles like this one here, the big candle pushes away. If that's not enough, price will consolidate, will move higher, and we'll have another go over here. And if this is enough, then price will eventually start to wriggle lower because there's the imbalance between supply and demand has been created. Okay, cool. Well, I'm going to leave it at that. I don't want to drag this on longer than necessary. But if you have any questions, please drop them in the YouTube video or in the Discord channel. And thanks again for watching. And again, thanks Philip for the question.